Welcome back. Markets looking good, 19,800, and we're holding above those levels. And more importantly, the Nifty Bank as well at a very crucial juncture at around that 44,650 odd mark, which brings us to the next conversation we're going to have. Apollo Hospitals is in focus. The company recently acquired a 325-bed that was partly built hospital in Kolkata for around 102 crore rupees. In fact, the hospital's major plan is to increase the bed count to around 2,500 in East India. Ms. Suneeta Reddy, the MD of Apollo Hospitals, joins us on the show. Hi, ma'am. Morning. Thanks so much for joining in. Well, give us a couple of details. This is a hospital that you've acquired on the East Coast, and you'll have to incur some capex as well. So, on a valuation matrix, on a per bed basis, what does it roughly work out to?
It works up to 1.25 crores per bed.
Okay, all right. And by when do we start seeing this hospital fully operational? And what is the bed capacity and where do you see it headed?
So the hospital will be fully operational in 12 months and full bed capacity will be 325 beds.
Okay, 325 beds and it will be operational in 12 months. There is a big expansion plan. Suneeta, hi, good morning and thanks for joining in on the show. There is a plan to expand further in East India. If you could tell us more about that. And any more acquisition plans that you have over the next, say, 12 to 18 months?
So as we look at East India, I think, we have acquired 250 beds in Guwahati in two hospitals. But beyond that, we currently have 1,000 beds in Calcutta. So we are looking at possible acquisitions and will continue to do so. But currently, this is what we have for the East. But moving on to the rest of the country, we have a plan to add 2,000 more beds at a capex of 3,000 crores over the next 3 years. So we will be adding 700 new beds every year from the year 24-25.
Ma'am, hi, good morning. How will, over this period, EBITDA per occupied bed grow? I mean, in your assessment, will we see growth? Will we see, that number staying where it is, pretty much staying where it is?
No, of course you'll see growth, and I think if you look at our overall margins, some will deliver better EBITDAs than the others, and as they mature, of course, the EBITDAs improve. So we have a stock of old hospitals and new hospitals. The mature hospitals are trending at an EBITDA margin of almost 30%. The new ones are at currently 19%. So blended, we're around 24.5%. And as you look at EBITDA per bed, we do see that, especially these acquisitions at this cost at 1.5 crores will give you a very strong EBITDA per bed.
What could be the growth we could look at the number, ma'am, over the next, through the course of this expansion?
In terms of EBITDA, I think,
EBITDA, yeah.
So I think EBITDA per bed is currently not the right metric when you're looking at two sets of hospitals, mature and new. And I think that, like I said, we look at the EBITDA, the blended EBITDA of the hospital. Having said that, because EBITDA varies from case mix, so the EBITDA per bed for cardiac is currently at 26%. So it varies by specialty, which is why we focus on case mix and payer mix.
All right, Ms. Reddy, we have the management of Healthcare Global who joined us, and they have a PE invested in there. And there are talks that the PE would like to exit. Have you looked at that asset, or do you consider looking at that asset in case the PE wants to exit out there?
Yes, I think, we looked at Healthcare Global before the PE came. And of course, it is a wonderful asset, very good clinical work. Having said that, taking over assets from PEs is not easy because we have a hurdle rate in terms of IRR, which is around 19 to 20%. But we will continue to look at these acquisitions. We have made bolt-on acquisitions, which is why, we're very confident of adding 2,000 beds. And in addition, our oncology vertical is currently at a run rate of 2,000 crores. So in terms of margins, in terms of return on investment, it is above 20%.
But Ms. Reddy, you have looked at this asset in the past. At that point of time, HCG was struggling and they required the money. But now that same asset, the same company is valued at nearly 2.5, 3 times odd. So will you look at it right now? Maybe, in fact, they have improved their financials. They've expanded a lot more as well. If it's on the block, will you have a relook at it?
Certainly we will have a relook at it. But having said that, I do have to say that we have expanded our oncology vertical into almost every city that we're present. So we have to see if there's overlap, whether it's worth paying the amount that a PE investor wants in terms of return.
Okay, got it. Let's talk about Apollo 24/7. I know this is a question that we ask you 24/7, but we can't let it go until the fundraising doesn't happen, right? We are almost at the end of the year, and I think last time you said that by the end of this calendar year is when you will finally raise those funds. Where are we on that front, and what is the quantum that we're looking at?
So if you look at the good things that are happening in 24/7, in the fourth quarter, they will reach operational break-even, which means that the requirement for cash has come down significantly. Having said that, I have always maintained that at the right valuation, we will be able to do a dilution. We do have interest in the stock, but we believe that, at the right valuation, we could do this. So currently, they are very self-sustaining in terms of cash required to grow the business.
So you're saying that at the right valuation, you look to dilute, but earlier I think you were looking to dilute at most 5 to 6% stake in the company. Does that hold even now? Is that the plan?
I think up to 10% at the right valuation. So,
okay. Up to 10% at the right valuation. And are you still looking to raise about $200 million? Or given that you said that they're self-sustainable, would the amount be lower than that?
It's between 100 million to 200 million, but 200 million is an appropriate figure.
And are we on track to do this by the end of the calendar year, or will it be by the end of the fiscal year?
Let me say that we have an option, and I think more later.
Okay. All right. Option, you have an offer.
We have an option.
Okay, got that. Ma'am, on 24/7, what is the GMV that we should work with for the full year? I think that number was 3,000 crores. Will you meet that? Will you exceed it?
Yes.
What's the latest?
We are on track to exceed that number.
On track to better that number, the 3,000 crore number.
Yes.
Okay.
Okay. Just a final question on the diagnostics business, because you do have, of course, that entire space has seen a lot of competitive intensity, but your own core revenues have picked up. It's almost a 50% growth that you've seen. And earlier you were looking at revenues of 500 crores for the diagnostic business. But given that there is so much competitive intensity, you think it'll be hard to achieve that target? What's the way forward?
No, I think we will achieve that target. And there's also a tariff increase of about 20%. So with that, we will definitely exceed that target.
Okay,
right.
Target of 500 crores achieved. And discounting, has it stabilized in that space, or is it still very high?
Yes. For AHLL, it is stabilized. Like I said, we've also instituted a price increase of 20%. So 500 crores is very realistic.
Okay, all right, Ms. Reddy, always good speaking to you. Thanks so much for stopping by and filling us in with all those details. And we look forward to having a chat with you post your numbers as well.
Thank you.
Well,
Thank you.
well,
Thank you.
for the